Well, that means that I put in, say, $1,000. In 5 years, I'm going to have $700. Now, I want you to think about other things people might do with $1,000, like go on a trip. If I go on a trip and I spend that $1,000, how much of that money am I going to have 5 years from now? None. None. Nothing. I'll have memories though. That's a good thing, but I won't have any money. If I go to the mall, spend that $1,000. 5 years later, nothing. Most of those clothes will be in the garbage. If I spend $1,000 on my new iPhone, the iPhone will be gone in 5 years because the Apple's gonna convince me to buy another one. So I don't think investing in a stock is something where it should be like make or break. Like I'm only going to invest if I know for sure what's going to happen. Let me just tell you, I've been through all the research. I've read thousands of papers on these topics. I have written original research papers on these topics. In case you don't know what the standard is to write an original research paper, you have to discover something that no human being in the history of the world has ever discovered. That's a lot of pressure. But I've written about 14 research papers like that, and that's what I had to do because that's what you do as a professor. That's what we do with our time. And what I can tell you is that most theories agree that you really can't predict what a stock is going to do. However, you can look at what's in front of you. And what the fundamentals kind of say is number one, a lot of analysts still believe Portillo's has some upside. In fact, the majority of them do. Let's see here. I'm looking to see what some of them are saying about this stock. Most of the estimates for Portillo's are higher than the $10 amount. The average price target for this stock on E-Trade anyway is $17. So that means that if it does go up to 17 or beyond, there are going to be a lot of people that are going to say, great, it's good that the market finally figured out what we've known all along, but it may not do that, right? There's no guarantees. You have to know that about investing. So let me read a little bit here. There's a guy named Nick. Nick, what's his name? It's like an Italian name. Nick, sorry, Stifel. I said Nick. Stifel Nicholas. He kept his buy rating on Portillo's, and what did he say? He says, drum roll, please. Let's see. The company has a 1-year high of $23.99 and a 1-year low of $9.93. Okay, I'm still waiting for them to get to the description. Okay, let's talk about the company. The company serves Chicago street food through high energy and multi-channel restaurants. We know these things. Tell me why you like the stock. I'm looking for, you know what? There is no other. Crap. Okay, let me see what UBS has to say. All they did was they just in this article they just described the stock. They didn't tell me why they had this analysis. So let me see if okay, UBS believes improving traffic trends, reduced macro pressure, and better visibility into the margin trajectory represent necessary catalysts from here. What does that mean? Well, what that means is that they believe that there are trends in traffic in terms, I guess, store traffic, stuff like that, that are in the favor of the company. Reduce macro pressure. Perhaps they're talking about things like interest rates being high, making it maybe difficult to expand and build more stores, or maybe pressure on the consumer. I don't think that's what they're talking about, but that could be an issue. Also, better visibility in the margin trajectory. So I'm thinking when they say better visibility, my first thought is just visibility of the franchise. I think Portillo's is a great company and a great franchise to make a great product. But then they say into the margin trajectory. So I'm guessing that means that their profit margins, meaning how much money do they make on every sale. So either way, though, most people are predicting that Portillo stock is going to be a good investment. So here's what I do, right? So I buy it and I don't overthink it. It's just like, saying, hey, I'll go on a date with this lady just to see if I like her. But because I also have a positive belief about this stock, I'm going to go ahead and maybe dollar cost average my way in. And because remember, when the stock price drops, you can either see it as confirmation that the company is starting to nosedive, or you could see it as, oh, wow, what a buying opportunity. It's really a choice. It's really a choice. In fact, that's what makes trade happen in the market. That's what makes stocks sell. That's what makes the options market so active is that you have what they call information dispersion. You have different people who are seeing the same information and walking away with different interpretations of that information. So someone says, Portillo's stock is now down to $10.22. So I come to the market. I run to the market because I say, woo, this is a buying opportunity. Portillo's is on sale. But then maybe you are willing to sell to me because you're seeing that same information and you're saying, oh man, this shows Portillo's is a dud. I'm getting rid of that. Right. So to some extent, in order for us to trade, we have to have different religious beliefs. Right? Seriously, I believe I'm a bull, you're a bear. That's why we trade. If we were both bears or both bulls, then what would happen is that the price would keep moving until we establish what they call a new equilibrium. So what would happen if we were both bulls? Almost like it's almost like trying to date somebody and I'm a dude looking for a pretty lady and you're a dude looking for a pretty lady. That ain't really gonna work because I don't roll like that. I don't go to Diddy parties, right? So it would be kind of awkward, right? So you'd have to be looking for something very different from what I'm offering. But in trade, you actually have the ability for two bulls to eventually make a deal. And let me tell you why. I might be a bull and you might be a bull. But then we go to the second dimension, the second derivative. How much of a bull are you? It reminds me of that movie Civil War. I saw the movie Civil War this week, and the guy says, "Don't shoot me. I'm an American." And he said, "You're an American, huh? Well, what kind of American are you?" Right. So what he was saying is like, we need to go to another level. Yeah, you're an American. Well, so am I. But are you a Colorado American? Are you a San Francisco American? Are you a Texas American? Right. Different kinds of Americans. So I'm a bull. You're a bull. But what kind of bull are you? Maybe I'm a bull who believes that Portillo's is going to go to the moon. It's going to go back to 24, the high of 24 and beyond. Maybe you're a bull that believes that Portillo's is going to go up, but not to the moon. So here's what would happen if two bulls get together and try to make a trade and the price is at $10 and something. So I'm a buyer and you're a buyer. Well, that's not going to work. So what would happen is that when you have a lot of bulls, a lot of people that want to buy, you have too many buyers. What happens to the price? Answer me in the chat. What happens to the price of a stock